Hello everyone, welcome to GK Today. Today's topic of discussion is Sri Lanka economic crisis. So, let's start the video. Sri Lanka is currently experiencing its worst economic crisis in history. With long lines for fuel, cooking gas, essentials in short supply, and long hours of power cut, the public has been suffering for weeks. A foreign exchange crunch in Sri Lanka has led to a shortage of essential goods such as fuel and cooking gas. Power cuts that last up to 13 hours a day. While, on the other hand, Rajpakshe had defended the government's action and saying that the foreign exchange crisis was not his making and the economic downturn was largely pandemic driven, where the island's tourism revenue and inward remittance fail. And in a recent update, Sri Lanka's cabinet ministers have resigned after protest over the government's handling of the worst economic crisis in decades. All 26 ministers submitted letters to resignation, but not Prime Minister Mahinda Rajpakshe or his brother, President Gotabaya Rajpakshe. Many angry protesters demanding the resignations of the Rajpaksha family say the move is meaningless. Understand the background of this crisis, that what happened after all that the condition of Sri Lanka got so bad. So, let's start. According to the critics, the root of the crisis, the worst in several decades, lies in economic mismanagement by successive governments that created and sustained a twin deficit, that is, a budget shortfall alongside a current account deficit. But the current crisis was accelerated by deep tax cuts promised by Rajpakshe during a 2019 election campaign that were enacted months before the COVID-19 pandemic, which wiped out parts of Sri Lanka's economy. With the country's lucrative tourism industry and foreign workers' remittances sapped by the pandemic, credit rating agencies moved to downgrade Sri Lanka and effectively locked it out of international capital market. In turn, Sri Lanka's debt management program, which depended on accessing those markets, derailed, and foreign exchange reserves plummeted by almost 70% in 2 years. The Rajpakshe's government decision to ban all the chemical fertilizers in 2021, also move that was later reversed, hit the country's farm sector and triggered a drop in the critical rice crop. The country is grappling with what is said to be its worst economic crisis since independence from UK in 1948. It is caused in parts by lack of foreign currency, which is used to pay for fuel imports, with power cuts lasting half a day or more and shortage of food, medicine, fuel, etc. As of February, the country was left with only $2.31 billion in its reserve, but faces debt repayments of around $4 billion in 2022, including a $1 billion international sovereign bond (ISB) maturing in July. Let me tell you that ISBs make up the large share of Sri Lanka's foreign debt at $12.55 billion, with Asian Development Bank, Japan, and China among the major lenders. And Sri Lanka's currency has also been devalued by almost SLR 90 against the US dollar since March 8. And according to the latest official data, the inflation in Colombo hits 18.7% in March, which is the sixth consecutive monthly record. On the other hand, food prices were also soared a record 30.1%. So, that's all for the update. Thanks for watching.